Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi Singh. Welcome to a weekly podcast. Global equities consolidated over the past week amid cautious positioning as investors wait quarterly results from major banks and mixed US economic data. Major global equity indices trended lower with the MSCI World Index, MSCI Asia ex-Japan and MSCI China indices declining by 0.1%, 2.1% and 3% respectively. In the US, the S&P 500, Dow Jones Industrial Average and Nasdaq Composite Index recorded a decline of around 0.1% to 0.4%. Back home, Indian equities snapped a 3-week winning streak and underperformed global peers. The Nifty index remained under pressure from the start of the week amid mixed earnings, foreign investor outflows, softening job data and declining manufacturing activity in the US. The Nifty index recorded a decline of 1.1% over the past week. Broader markets outperformed Nifty with the Nifty Small Cap Index up 0.3% and the Nifty Mid Cap Index up 0.7% for the week respectively. Among sectors, FMCG, pharma and metals were the only sectors to end the week in green with modest gains. The Indian fixed income market had a decent week with bond yields falling across the curve as strong investor demand outweighed gloom from hawkish RBI policy minutes released during the week. The RBI sold INR 330 billion worth of bonds at the weekly auction as per plan at below the cutoff yields, supported by strong investor demand compared to the previous week. For the week, the 10-year Indian government bond yield fell 6 basis points to 7.16%, while the 3-year and 5-year Indian government bond yields fell 6 basis points and 4 basis points for the week respectively. The INR depreciated against the USD as foreign investor outflows, rising US bond yields and strengthening US dollar negated the impact of lower crude oil prices. For the week, the INR depreciated 0.4% to close at 82.1 per dollar. Among the other key updates for the week, the first one was on India's wholesale price inflation, which fell to a 30-month low of 1.34% year-on-year in March 2023 compared to 3.85% in the month of February. With this, the WPI trended lower for the 10th consecutive month as costs rose at a slower pace for fuel and power and fell for manufacturing for the first time since May 2020. The cost shrunk at a faster pace for basic metals. Also, prices of primary articles eased despite a quicker rise in the cost of food. On a monthly basis, wholesale prices were unchanged after edging up 0.2% in February. The second key update was on India's monetary policy minutes of the meeting. The minutes of the MPC meeting revealed that the members of the rate-setting panel noted the slowing domestic high-frequency indicators such as softening non-oil, non-gold imports that point to weakness in domestic demand and also highlighted the possible negative impacts of a global growth slowdown. Members awaited more clarity about how weather uncertainties could impact inflation going forward and agreed to pause for now to gauge the full impact of past rate hikes. One member noted that the MPC needs to keep a careful watch on this evolving global macro situation, proposing further that if crude oil prices were to creep towards the triple-digit mark, there might be a need for a monetary response. With these concerns in mind, the 6-member board unanimously voted in the favor of the resolution to keep the policy repo rate unchanged at 6.5% after hiking the policy rates by a cumulative 250 basis points in fiscal year 2023. At this point, I'll take a pause and thank you as always for listening. If you enjoyed this podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.